Hello again, everyone. In this technical analysis of the stock market video, today I'm going to talk, I call it the fractured market, and we'll talk about why when we look at the Nasdaq Composite Index and the New York Stock Exchange Composite Index. We're also going to check in on gold. Gold started to pop yesterday. It's been trying to turn, but it may have really come alive yesterday. We'll check in on it and see. All right, let's start off here with the Nasdaq Composite. I had the high right here on July 25th as the high, the ending high for minor, intermediate, and primary wave 5. Okay, well, that got deleted as of Friday. It got negated as of Friday when the market pushed above that high. So you can't have the high labeled as 5 complete here if the market is still pushing above it. So the market's telling us that things have changed, and things, the market's very dynamic. It's changing all the time. And all you're trying to do with whether it's regular chart analysis or Elliott wave patterns, you're trying to assess probabilities. And if anybody tells you they know exactly what the future holds, run. Because nobody knows exactly what the future holds. All you're trying to do is assess probabilities. And since you're trying to assess probabilities, if you're trading or investing, you better position size appropriately, okay? Because that makes all the difference. All right, let's talk about this. The main difference between my preferred scenario and my alternate scenario is where does wave 4 end, okay? So right now, this is a flat for wave 4. What I call an ABC flat, and it ends here on April 2nd, okay? This is my preferred count. That drives this scenario, which isn't, which basically says we have a fifth wave underway, fifth and final wave for minor wave underway, and it could be an impulsive wave, kind of like wave 3, or it could be an ending diagonal of some kind. Ending diagonal is where the waves overlap, and then they finally ends in here in a 5-wave structure in wave 5. So that's what we're watching for. What is it going to be? How's it going to play out? If you look at the preferred count, this says wave 4 in here, and I've got it as minor wave. I could have it as intermediate. It doesn't. I'll just change the wave structure in here. Actually, you know what? Let's make it intermediate, and therefore it's in sync with what's happening on the other scenario. Okay, this shows it ending on, what is that, April 25th. Okay, so therefore it's a much more aggressive move in terms of the move to the upside. Okay, wave 1, minor wave 1 ends here, and we're working our way up, and we're just in the midst of minor wave 3. Okay, we're in the new wave 3 of minor wave 3. Therefore, this could be very, very strong, is the implication of this. So we're just, again, we watch and we're aware of this. And then we'll watch to see how the waves unfold. But right now, the Nasdaq, ended fairly aggressively the way it ended here on Friday. And if you look at the weekly chart, you could see it ended practically on its high for the week in here and closed above the highs of the previous weeks. This is new all-time closing high for the Nasdaq Composite. So what I've done here is I've created a little channel for this last intermediate wave 5 or primary wave 5. I've created a channel. Primary is the circled 5. Okay, that's primary wave. And this is intermediate wave, the blue. Okay, so I've created a channel here. Take a line between 2 and 4, project from 3. So we could get a throw over of the bigger channel. Okay, in this channel, we could get a throw over as this aggressively moves to the high side. What's the bigger channel? The bigger channel is the entire move from March 2009. Okay, so that's the picture. That's why I'm showing those trend lines that I'm showing. All right, so back to the daily. Here's how that looks. All right, let's take a look at the New York Composite Index real quick. And where are you? There we are. This is a much different picture in here, and you can see the big key thing on the New York Composite Index, it is still not retraced over, yeah, I went a couple of points on this August 7th above the 61.8% retracement of this entire move, the first move down, okay? And that's it. That's all you got, okay? So this is very much a fractured marketplace. This is showing one completely different picture than the tech-heavy Nasdaq stock index, okay? The S&P has now slightly crept above the high. It did it for, you know, 1 day this week. So we're going to watch and see how that evolves also. All right, so that's the New York. Let's take a look at the gold, and gold has popped and started to come alive this week. This was up $2. GLD was up $2 on Friday. Good volume kicking in here. So watching to see how this is going to evolve. Let me go to the weekly count and zoom down out of this. And my preferred scenario says that what we're doing is that we're working a B wave, a big B wave, which is a triangle, okay? That is the preferred. The alternate says this is a flat, potential flat, right like this, okay? The alternate says that this is a flat, and therefore we have, once the flat completes, we have one more move to the upside in here, up to C, like this, and that would complete B, primary wave B. Okay, so the real question is, once this starts to go, you know, that's why I'm a little cautious about this. Is this a fake out, or is it really, you know, trying to go? Once this starts to go, it's either going to complete and push all the way up here to C, or it's going to push just a little bit higher up here to E and complete this triangle, and then that's all she wrote. So that's what we're watching for. Let me go back to the daily, and you can see if I go over here to my silver analysis, is where I put the moving averages. You can see how it's trying to turn, and it's broken a downtrend, at least initially, okay? All right, that's the picture on gold. It's starting to pop. This could get interesting. All right, everyone, have a great rest of the weekend. We'll talk to you next week.